Well, welcome everyone. I got to admit, this is a panel I've been looking forward to, and I'm not just saying that because I am moderating it, but love to be able to dive in here with these three entrepreneurs about something that is top of mind really in any market, fundraising. But especially in a market like today's, things are a little more cautious, investors are being a bit more choosy. It definitely doesn't feel like 2021 did. And of course, where do you go to get advice for fundraising? A lot of people love to give advice. You can find it on Twitter, you can find tons of thought leadership on it. But I think most of us in this community know it's sometimes hard to sort of cut through the noise and find out what people are saying versus what people are actually doing, especially when it comes to investors. So hoping to dive into that a little bit today, kind of looking at how these three founders navigated their fundraising process and sort of what they've taken away from it that could help founders looking to fundraise either for the first time or sort of coming into this more challenging market. And hopefully we can walk away with some fun advice today. But I think what might make the most sense to get started is to sort of set the stage. If we're talking about fundraising, maybe it'd be a good idea to start if you guys want to each describe what your fundraising journey has been like, what rounds you've raised, sort of what the market was like when you did raise them. Maybe Amanda, you want to get started?
Yeah, for sure. My name is Amanda DoAmaral, the CEO and co-founder of Fiveable, or edtech company, do content and study spaces for high school and college students. We did our pre-seed round pre-COVID, right in the kind of end of 2019, the winter. We did a seed round then in the next summer, and then our Series A was about a year ago.
Mm-hmm. What about you, Sara?
Hey everyone, I'm Sara. I'm the CEO and co-founder of Alloy Automation. We are a connectivity layer for e-commerce, and we essentially allow brands to automate away tedious work. And so we've raised 3 rounds of funding in total and 27 million. Did our first round in March of 2020, right when the pandemic hit, and I was actually freshly dropped out of Harvard, so 18, didn't really know how to do fundraising. And then we did a 4 mil round later that year when things were good, and then we did our A with Andreessen earlier this year, which obviously this year was a roller coaster.
Awesome. My name's Arman. I'm the CEO and founder of a company called Parthean. We're a financial education company, and we pair you up with a financial coach who creates a custom learning path for you based on your interests, your goals, and your needs. We raised a little angel round right before last summer, and then we went through Pair VC's phenomenal accelerator, and that helped us raise a, whether you call it a pre-seed or a seed really depends on the day, but we raised some money last December, and then when the market turned, we invited some more investors through an extension just a few months ago.
Mm-hmm. And thinking about sort of raising those first venture dollars when you guys were first looking to sort of bring capital into the startup, was it harder than you expected?
I didn't know what to expect. I used to teach in Oakland. It was it was a whole new world for me. But it was really hard because I also was just someone who was completely underestimated in every aspect. And those early rounds were really tough. I had to do a whole lot of pitching, like hundreds of different pitches in the beginning to just prove to people that I was worthy of those dollars to put them towards supporting students and building a huge business out of that.
Mm-hmm.
Yeah, honestly, like for me, I didn't really have a sense of, what money looked like. And even now, it's like you look at the bank account, there's like millions of dollars in there. It's just zeros at the end of the day. But prior to fundraising, I'd never really even had a full paycheck. So I thought of fundraising and raising money as just a super abstract concept. Like you start a project and then you basically go out and beg for money, and somehow the money appears, and you keep building through that. So it's always been like a medium for achieving whatever you set out to build initially.
Yeah, I think it's even more so than it being difficult, it's just so much different than what you expect, because you always hear about the announcements of people who were who just successfully fundraised. You rarely hear someone going out to TechCrunch and saying, hey, I just failed raising a bunch of money, right? That mixed with the fact that founders are rarely coming to it as professional fundraisers. We're usually really good at something else. And so we're coming in, working with professionals who, they know how to play the game, they built the game, and we're kind of coming into that, kind of like you mentioned. So definitely.
So it's interesting that you just mentioned that regardless of whether it was difficult, it was different than you were expecting. So maybe that would be good to sort of double click on what was different about the actual process and what you were expecting, and maybe what surprised you about it as you were going through it.
I mean, honestly, I think that the thing that probably surprised me the most is there were just no rules to it. Like every mentor, advisor I had would tell me something different sometimes, you know, especially in the early days. And it really just depended on like, am I talking to the right person that is interested in investing in the stage I'm at, in the sector I'm in me as a founder, where I live? Like, do all these things come together, and can I tell this story of what I'm doing in a way that is going to get this person excited? And it really just kind of comes down to that relationship in a lot of ways, and like whether or not you can communicate that. Whereas I think before, you know, I sort of was like, you know, you read those like articles or you see the things on Twitter and I'm like, okay, I have to do it this specific way. But none of that is really the case. It's much more fluid than that, I guess.
Mm-hmm. Yeah, honestly, I was surprised by, I think there's just a lack of standards around, one, like how people dress in early stage fundraising, how people act, all of that. Like the first money we got was through an angel investor, the founder of Webflow, and he just like rolled up to the coffee shop on his skateboard, and I skateboarded in high school, and like we just talked about that, and at the end I was like, do I ask him for money? Like, what am I supposed to do? Like, what do you exactly say? And he kind of just offered the check, and honestly, like, early stage fundraising is just always going to be like that. It just depends on that other person, even like the firm's style, and it's not as glamorous, or it's not like how they portray it in, say, films where you're in a boardroom and there's like this formal thing. It's sometimes just, you might just be sitting having tea or whatnot.
Yeah, I mean, I think the thing that helped me was realizing that style is something that you can't really learn. Like both of you said, like there's so many pieces online about you should dress in a certain way, you should speak in a certain way. That, like, to your point, a lot of people say you should just ask for advice, not money, right? There's so much advice on style, and I think that's so different per investor and per founder. So trying to learn that, I think, is a fool's errand. What I think is really, really helpful is trying to understand what investors are really looking for, and then how you can portray that. Yeah, and I mean, we could dive deeper into that if you're interested, but that was like a big unlock for me, is just understanding what is a venture backable business, and is mine one, and how do I communicate that to them? Forget about style, just let's get to substance, and then I'll layer my own style on top of that.
Mm-hmm. And you all brought up a good point about sort of thinking of how do you approach it when you're getting so much advice, and you mentioned like conflicting advice sometimes, and it's hard to kind of know what actually works, especially because fundraising is so many nuances involved with that. Each investor is looking for something else. Each investor wants to be pitched differently. And I'm curious if you guys ever came across a piece of advice that sort of stuck with you, or a piece of advice that you got that you actually found was helpful as you were going through the process.
I don't know if there was one thing for me. I think it was about kind of narrowing in on specific mentors, specific advisors that I kind of trusted more, that I wanted to listen to their advice more than maybe other people. And honestly, a lot of it is too just like kind of being able to block out that noise and know like you are the one that understands your customers, your users the best. You understand the problem that you're solving. That's really all that matters. All the other pieces, like people are going to give you advice whether it's about fundraising or not, and you sort of have to be able to ignore a lot of it in, you know, like kind ways. And so that's kind of like a big piece of it, especially as someone that it was sort of an outsider coming in, feeling like, well, if they're saying it, then that's how I have to do it. But realizing that like, no, I need to do it my way because this is my company. I'm gonna solve this problem the way I want to do it, and I'm gonna surround myself with people who want to invest in that. Like I don't want to portray myself as someone who I'm not, because then that's not going to go well, even if they do write the check, because this is going to be a long-term commitment, long-term, you know, relationship. So it's really about kind of staying true to who you are in that.
Mm-hmm. Yeah, I think on a similar note, one of the areas that I found the most conflicting advice was almost like the amount of transparency you want to have in a fundraise, for example, around valuation cap. So a lot of advice was, don't tell them like how much you want to raise at, just like beat around the bush, just, you know, don't say stuff. and then they'll give you what you want. And then other advice was, no, tell them what you want up front, whatnot. What I found was the best path in that scenario is actually just leading with clarity. It's like, hey, I think we want to raise in this range. Frankly, don't know where we're at yet, and then we'll see where it goes. So in general, I think clarity leads to more rigor, and that actually is probably the best approach I've found for that part of fundraising.
Yeah. For me, the biggest piece of advice that I got was, so like when I first started fundraising, I think like a lot of other founders, I would complain about the fact that it is a game. And I was like, why do I need to play this game in order to get capital for my business? Like you said, Amanda, like I know my business and I know that, and I kind of went down that thought process. And I got advice from a close mentor saying, essentially, if you're complaining about the game, you're not ready to raise venture dollars. You have to play the game, and in order to play the game, you have to learn the rules so that you can successfully play the game, right? And you mentioned that there are a lot of founders here who want tactical advice, and for me, I took that and I actually went and read Secrets of Sand Hill Road, which is basically just like a crash course on how venture capital works. And for me, like I was kind of alluding to before, essentially learning that venture capital is just a capital allocation job, but it's a really, really unique version of that. Then you learn that, yeah, VCs don't say no, they kind of beat around the bush because they want to potentially invest later. It's not that they hate you or they're being rude, that's just part of the game that they're playing, right? And that kind of goes to every weird behavior that we see, including having ghostwriters for Twitter, right? Like everything is an incentive in the game. And so learning that for me was incredibly, incredibly helpful.
And Sara, something that you just touched on is sort of picking through the bad advice that you got throughout the process. And that's something I was going to ask you guys about too, is sort of what's one piece of advice that looking back on it just was so far off or that you just didn't find to be relevant at all through the process?
I think for me, it was probably more so the people who I was being introduced to in the beginning. Like that pre-seed round, a lot of those intros came from different accelerators, different folks, and I ended up finding myself like pitching an angel group in Tennessee that was a bunch of white dudes that thought I was the help there, like at this event, like handed me his plate, like that's what he did. And I'm thinking like, I just like me and my co-founder like got in a car and drove down to Tennessee thinking we're gonna get this check. This guy didn't even trust me to like be an attendee at this event. They're not writing me a check. So I think a lot of that early advice that was bad for me was who was gonna be a good investor. You know, like people are not going to take me seriously if they're not gonna see me as someone that is even their equal at all. So I need to make sure I'm surrounding myself by people that actually do believe that I can achieve something, that I know something about this space, that I understand what students need, what happens in schools, that, you know, I may not have grown up in a tech environment or worked at, you know, gone to Stanford or worked at a tech company before, but that I can figure those things out and connect with the right people in that sense.
Yeah, I think for me, the advice that really didn't work during tough times was like speed running the fundraise to generate FOMO and to hike up your price. So I think especially for this panel, like if you're raising during a global pandemic or during a global financial downturn, you actually really need to prioritize long-term relationships and not running a process that is opaque and leads people like kind of basically is misleading people by just like fundraising on speed. So in general, the solution to that I found was, especially if I didn't know an investor before, like kind of starting the fundraise 6 weeks in advance, talking to them a few times, not telling them we're starting the fundraise per se, and then starting the process once we had gotten to know the people that we really wanted to get to know over those weeks.
Yeah, and to that end, I think there's like a lot of advice that you get about like, and people might feel different ways about this, but like don't talk to investors unless you're fundraising. It is a two-way interview process, and if I have more time to get to know an investor, that is a win for me as well. That kind of leans into the bad advice that that didn't work for me, which was kind of to your earlier point around being kind of coy and shy and not saying certain things. That just doesn't work for me, and it comes off as really, really inauthentic. And so just being super transparent recently, I guess, worked for me.
And Amanda, what you mentioned was really interesting, sort of this concept of investors maybe coming to the meeting and you not necessarily fitting the ideal profile in their minds of sort of what a founder looks like or kind of what they're expecting. And that's definitely sort of a caution you're going to come against in any type of market, unfortunately. And I'm curious, knowing you all three probably experienced some form of that in the fundraising process, how do you work through those types of biases from investors who are just going to be more cautious just because of your background as a founder?
Honestly, I think at first it was about kind of building up my own confidence and understanding that I don't want to make that person money. You know, like if they don't believe that I can do this, they have biases against me. Like they don't have to be a part of my story. They don't have to be a part of my success. And owning that took a lot. Like this is a lot. Like get a therapist. Okay, so like you got to really work through some of those stuff, but you really have to come to realize that like what I'm building is worth it, and the people who will see that are the people I want to work with. Like to your point of, it gets really hard. Like you don't have wins every day or every week or every month even. And so what happens when you're not in a good chunk of time? Are your investors going to look at you and think, well, someone else could do this better? Or are they going to look at you and think like, get over here, come sit next to me, and like, let me help you figure this out? And so that it kind of just comes down to like, you know, as much as the investors themselves are filtering through people and deciding who they want to work with, like so are we, right? Like we're trying to figure out who we want to work with, who's going to support us, who we actually want at the table, and making sure that there's room for them.
Mm-hmm. Yeah. I mean, I totally agree with that, but on a different point, I do think Twitter is the greatest equalizer these days, and you can raise with an anonymous profile picture, you can raise without even like people knowing your name. So I think the norms have changed a lot since fundraising on Twitter has become more common. Mm-hmm. And actually our like Series A lead and our seed lead, they both kind of followed us on Twitter before we even met in person. So honestly, like sharing your thoughts, your thought leadership, the work you're doing, and letting that lead is more important. But obviously, I think showing up in person, you cannot avoid some sort of bias or some surprise they might have. I think in general, I just showed up to fundraising meetings and ripped jeans, hoodie, but they already saw the track record of work. So I think you definitely want to just start with that and then not let them change their mind due to bias.
Yeah, the comment you made about Twitter is huge. I raised most of my money off of Twitter, but I think the rest of it is hard for me to answer, honestly, as like a man who went to an elite college. So I think I'm going to sit out of that one.
Well, focusing on this raising on Twitter concept for just a second, maybe if you guys want to talk about sort of how you navigated that process, and maybe do you have to tailor the pitch or tailor sort of what you're putting on there for that platform specifically, and what does that look like?
I didn't raise on Twitter, so I'll let you go.
Yeah, I mean, I can kick it off. For me, I think Twitter has been a tool for me to just get to know people and get them on a call. And so that happened with a lot of my investors. It happened with Natasha at TechCrunch. That's how I met her. And I think just treating that like a typical relationship, again, just like, let's break this down to something really simple and not overcomplicate it. Basically, people just tell jokes, and then if someone tells a funny joke, I'll just DM them and say, hey, that was funny. Or like in Natasha's case, she would write a really interesting article about something in the ed tech space of which I care a lot about, and I would respond really thoughtfully to her, and we would just have a conversation. And kind of like you were saying earlier, just starting that conversation earlier, and I started talking to like Alex Lieberman, for example, one of our investors from Morning Brew. He and I started talking like 6 months before I asked him to get on a call to talk about the fundraise, because we just built that relationship, and I did that with a lot of other investors as well. So yeah, just constantly on there DMing people.
Yeah, I think thinking from first principles, it's still conversations with humans at the end of the day, but I do think like building a brand and kind of raising through Twitter is still playing with fire, because the algorithm kind of prioritizes memes, spicy content, so you'll find yourself posting that, and then you'll be engaging with, actually, one of the first tweets that we did as a company was retweeted by this account called Praying for Exits, which was really big at the time, and you never know which VCs hate that account, which VCs think you're then a meme company. Like, obviously, we stayed away from that, but you just have to be careful there.
Mm-hmm. And I know something we all talked about as we were sort of prepping for this panel, and it's come up already a little bit, but the concept of when you're fundraising, regardless of the market conditions, you hear no a lot. And it can be kind of hard when you're working on something, you're building in and out every day to consistently hear no. And I'm curious how you guys navigate that. And I'm sure in today's environment, just with how ventures just being more choosy about where to invest, I'm sure founders are hearing no even more often.
I mean, I think sometimes hearing no is sort of a good thing, because then at least you know, like, this person's out, I'm moving on, I can go down my list, go to the next person. Sometimes you don't even get a no. It's very like kind of wishy-washy, like you said, like they want to wait until there's a chance later. And so getting a no is sometimes good, because then you're just like, okay, well, it's clear that this is not right time, right person, right place, right thing, like something's not right. And then I think it's just about sort of trying to figure out, like, if you get a no, if you can get a reason for the no, which sometimes you don't get a real reason, but sometimes it's just really trying to figure out, like, what was it that didn't work for this person? Is it something that I can work on? Is it something in my control? Or is it more that I just need to talk to different people, that this just wasn't the right fit? So it's a process, because you sort of have to like when you're fundraising, you're just like constantly iterating on it. Like every single day you're updating your pitch deck, you're thinking about like how, who else should I talk to, or how else should I present this, or, when I said it this way, it really clicked. When I said it this way, like they didn't quite get it. So you sort of just like take the feedback and you just keep going.
Yeah, agreed. Like getting no's is actually really good, because as a founder, you have this pretty limited perspective on your business, and having those outside opinions and even just like pokes and like where you're missing data, and like a reason VCs often pass is because like market sizing isn't to their liking, or your go-to-market isn't super fleshed out. So having almost like that feedback loop, and then forcing yourself to then answer those questions, can even lead you to decide to pivot the company or approach it from a different angle. And then also we found that how elegantly and gracefully someone has said no has also changed our relationship with that VC. So Bain was the lead for our seed round, and they were actually a group that gave us a really well thought out no, and it was like a lot of data, reasoning, and like these are the things you need to answer for us to do your seed. And like that's actually exactly what we did. And honestly, like I really respect firms that can do that really thorough, graceful rejection.
Yeah, absolutely. I think the way that I think about fundraising in general and hiring and a lot of stuff that we do is that it's more of a search than a sell, right? And so I think a big part of that, of course, is describing your business in a really compelling way to a venture capitalist, and improving that pitch over time based on their feedback, to both of your points, is incredibly important. But also hearing those no's, and like that's basically just, this was not the right person, and I'm just going to continue searching for that right firm or a person or whatever. That reframing kind of made it seem like, okay, cool, this was just mutually not a good fit.
The best thing is when you get a DM a couple years later of like, man, you're my biggest regret. And you're like,
Definitely. But thinking about the actual pitch process, you're either there on the phone, you're in person, you're on Zoom, you're chatting with a potential investor. Is there a question that threw you guys off at some point during the process? Like a question you wish you had prepared for before the pitch that you now will never sort of forget going out again?
I wish I'd prepared for this question.
I don't have one off the top of my head.
I think in general, like a lot of VCs, not a lot of VCs actually think from a historical perspective, or I think when I was doing our pre-seed, I never really prepared for the question of like, why now? I think also like, just as if you're a younger founder, you don't really learn internet history and like waves of different types of software. And so even looking at like previous cycles can lead you to like a really good answer for market sizing, timing of the business, even like go-to-market motions, like what didn't work before, what will work now because of changes to the landscape. Like that can lead to a really compelling pitch.
Mm-hmm. Mm-hmm. And thinking ahead to raising future rounds, now that you guys have all raised a couple of rounds, how will you change your pitch next time? What have you learned? Like, what's the one thing biggest thing you've learned going through this process that you will now take and sort of use to improve the pitch going forward?
I mean, I think the pitch in general has to evolve as the company evolves. Like every round is different. You know, like when someone's investing in a pre-seed company, it's really about the founder, the team, you know, the idea, but it's much more like vague than just like, you know, are your numbers right? And so I think as the company is maturing, the pitch has to mature to be able to like weave together the actual numbers, like how are we doing, what's happening, what are we going to do next, and you have to be a little bit more, you know, like put together in some of those pieces. But I think it's just a matter of like staying true to, you know, I think the things that always made me stand out were some of those like how I'm going to tell this story, what my passion is about this, and that's the kind of stuff that needs to stay there, right? That's going to unlock things. That's the magic of a pitch to whether it's a VC or, you know, someone I'm trying to hire or sell to. It's like there's something in that pitch that is magical. Don't lose sight of that, and that's probably the biggest thing.
Yeah, I think for us, like we'll continue to add more data around like current trends and like what has evolved since our last fundraise. I think that's always interesting to include. And then I think something that's a bit underrated is the team slide. Like I still see most team slides just static pictures and logos. And I think for us, like I think a lot of people might think it's wishy-washy in earlier stages, and I think it is, but in later stages, almost like what your team stands for, what kind of how you quantify the bar for your team, because ultimately at some point it's really about execution and not the idea or the market.
Yeah, I mean, like you said, like we raised a pre-seed or a seeder, and I think a lot of it, it is just going to be a different pitch. So just including things that are more relevant for the future. But I think also, Amanda, you were alluding to this, just putting more of myself in there and making it more conversational. The way that I ran my pitch meetings were basically like, I had a really, really short pitch. I condensed it down as short as I possibly could. And there was basically no time for conversation or interjection or anything, and then ran the rest more like a conversation. And that worked, but I might elongate this and make the pitch itself more conversational. And again, that's like a little more detailed, tactical, but that's something that's kind of been in the back of my mind.
Mm-hmm. And since it's come up a little bit sort of throughout a lot of these answers, I'm curious, how do you guys strike the balance when you're pitching between sharing the mission, like showing how passionate you are about what you're trying to build in, but also selling the numbers and making an investor see it as a business that they want to back as well, in addition to the mission?
I think it's just about weaving those things together and kind of knowing when to share certain information at what time. You know, in my first call with someone, I might not just like dump all this data on them, but rather like kind of weave that together. Last time I raised, I found a lot of use in just like putting together a whole like kind of interactive Notion doc, and that made it so that I could kind of weave in, you know, slides and a video, and like it could bring together the information a little bit better. And so I think it's just sort of like how you kind of do that with how you like balance the things that you're actually doing, you know, putting like names and faces to your users, you know, or to your customers, and then showcasing like what that means from the business side too. And so finding ways to kind of balance both, sometimes within one slide or one conversation.
Yeah, I think you as a founder technically have control over what you can and can't share. And so what we've always tried to do is think about what data an investor needs in order to make a decision and what's sort of optional. Like if they're getting into conversion rates for like XYZ, it's probably they just lack conviction. And so you always have to remember you can reject investors and fire them, and you can essentially just say, here's what we have and that's all you're going to get, and then move on to the other investors that can make the best use of that data.
Yeah. I mean, there's no silver bullet when it comes to crafting a pitch. Like I mentioned this to all of you earlier when we spoke. Creating our pitch took like a month of day in, day out story crafting, sitting down with some of the partners at Pair VC and their accelerator, and essentially being like, what are the questions that investors, and specifically venture investors, want to have answered for them, right? And these things are clear. They are, is the market big enough? can you scale to kind of capture this market quickly enough? Can you fundraise again? There's a lot of really simple things that they're looking to answer. And like you said, Amanda, like you have all of this information, whether it is data about the traction in your product or your team or anything strategically or anything, right? And then just puzzle piecing these things together in a way that sounds enjoyable to listen to. It takes just a long, long time, but thinking about it like literally with sticky notes and a puzzle where there's data and passion and you're kind of putting these things in order was helpful.
In looking at some of the questions submitted from the audience, thank you everyone, we're getting quite a few actually, which is great. One that I think would be really interesting to hear all of your takes on is, how do you know when it's the right time to raise money?
I was just talking about this one earlier yesterday. Honestly, I think that the right time is like if you can. That was sort of a learning that I had. So, you know, like when we raised our Series A, even our seed round, both of those were earlier than I had originally planned to do it. But if you have momentum, if you have interest, and you see that there's an opportunity, like that's the best time to do it. And in retrospect, then it looks like, you know, oh, like she raised this money right before the whole market crashed. She was super smart. But it wasn't that. It was just like, there was interest now. So I'm just going to do it now so we have the capital later.
Yeah, agreed. I think it's just testing the waters a bit, like never really, like don't commit to a fundraise until you think the environment looks good, you feel the interest, like you're ready. And then after the first one, like the first one is the hardest to choose actually in terms of timing. And then after that, it really is the milestones. And you can actually get feedback from those investors in your round, whether or not they do your round, like what like that next one is.
Yeah, I think asking investors, right? And I think to your point, having investors makes that easier because then you just ask them like, hey, do you think we're ready? That helps with what you mentioned about will you be able to successfully go out and do it? But then I also think, is your business ready is another question, right? There are a lot of people who, even if you can fundraise, maybe it's not the right time, right? Maybe you just raised some money a year ago. You could kind of fundraise a bit more freely. And right now, based on price, I think people are being a bit more hesitant. So considering both where is your company at, is the team ready, are you ready, do you think that you can get more traction reasonably before you run out of money? All those things are one thing to consider, but just asking investors that you have on your cap table, and if you haven't fundraised, literally going out and asking investors that haven't invested, like, hey, this is where I'm at, what do you think? That is a question that I've had answered, and it's a really useful conversation to have.
That actually leads perfectly into a question from the audience that said, what is the most valuable question you have asked a VC?
I think it's really useful to push them on how they're thinking about that market and what they're seeing across the space, what's missing, like really digging into their thesis on it, because they've gathered a lot of data from a lens that I didn't, right? Like they have access to things that I may not. And so really understanding how they're thinking about it can really help me figure out what they want to be true, what their values are, and whether or not we're aligned.
Yeah, I think probably you could ask an investor like why founders hate working with them, or do the back channel yourself, or look at their VC guide and see if they got any 1-star reviews, like why that was, and ask them point blank. Yeah, I think just in general, due diligence is the best thing you can do.
Yeah, for me, it's the most helpful question is actually after the check has been written. I ask every investor who's invested, why did you invest and why did you almost not invest? And that has been incredibly helpful feedback, just telling us where are the holes in our business and what are the really, really strong points. And that's allowed us to improve, for sure.
And I'm going to combine a couple of these questions here because we have a bunch of questions regarding approaching equity and sort of deciding how much equity you want to both give in these different fundraising rounds to investors, and sort of thinking about early employees as well, and sort of just how did you guys navigate sort of thinking about that aspect of fundraising?
Definitely with a lot of support from my mentors, advisors, because it is really challenging to figure out what the right balance is. Obviously we want to give away as little as possible, investors want as much as possible. So it's just, you're trying to figure out where that happy medium, that compromise is going to be. And obviously like making sure that you're protecting what the founder has. Like we want to make sure we have enough too to stay invested in it, and we want to make sure we can get the team compensated with it. And so it's really challenging, and it's definitely like one of the harder parts, I think, of like when you really get down to like the negotiations of things. But I think you have to sort of go into it knowing what you're willing to, like where is your limit? What are you willing to do? And keeping that in mind as you go. And if you need to walk away from something because it's past that, then you do.
Yeah, I think in general there's like bands of equity you give up at every stage, and if you're far to either end of it, that's like a red flag with that particular VC or however those negotiations are going. And in general, like my attitude has always been be as cheap as possible in terms of the VC you give out, or the equity you give out to VCs, and be as generous as possible with employees. So you want to protect internally and not give out that much externally.
Yeah. I think it's one of those interesting things where there are a lot of rules of thumb, which I think are really important to equip both you and employees. So every time I start negotiating with an employee for their equity, I send them a bunch of materials on like what they should expect so that they're also well informed. And I think that that's really helpful to kind of keep a check on yourself and make sure that everything is kind of going smoothly and according to plan. But also, it's just so case by case, right? Every time you talk to an investor, you really need to consider that on its own. And every time you speak to a new employee, I believe you need to really consider that as its own thing and just continuously keep track of your cap table, right? Like, I think rules of thumb, again, are really helpful, but being opportunistic is one of the most important things that we have at our disposal. And so I think keeping each deal as a singular conversation has been helpful.
And since we only have time for one more question, I feel like a lot of this has sort of focused on the struggles of fundraising. Fundraising is hard, but I'm curious maybe to close out, what's one fun aspect of fundraising, and what is the funnest part of going out into market?
I mean, you go in with a low bank account, you come out with a big one. I feel like that's the most fun. No, I feel like it's really hard and it's challenging and it puts you through the ringer, but it also like does make your business better. You're able to explain things in a much more concise way. Like I've always felt like the process itself is very good to go through because it just like is rigorous. And I feel like it just like, it's validating, like when someone writes you a check, it means that they truly believe that you're going to be building a $1 billion, several $1 billion company. And that is huge, then I'm like calling my mom, just like, look, I did it, like it's exciting. It's a really exciting thing that can happen.
Agreed. It's like the social and emotional validation, like the announcement day, like when we had our TechCrunch piece come out for like the seed and the A, it was always, I think I got like 10,000 notifications and probably couldn't check my phone for a day, and then took like a month to sort through messages. And you find all sorts of interesting messages in the inbox, and like I think I've had a couple people I've like looked up to for years like reach out to me versus vice versa. So I think fundraising is a really good path to like validating the company, but also yourself if you're on that journey.
Yeah, absolutely. It's like the only punctuated event that we have as founders. Like we don't get promotions, we don't get raises, like that doesn't happen for us. But as people in running venture backable companies, that is really the moment that we can kind of look at our family and say, hey, look, I'm doing something cool. So that's definitely fun. I think the other thing is, both of you mentioned, really using the process as a way to improve, because I'm not gonna lie, it is really, really difficult and it is incredibly emotionally taxing. But looking at it as a product and something that you're iterating on every single day, I've definitely noticed I can describe my company way better now than before. Even like our go-to-market strategy, I remember speaking to an investor and they were like, hey, have you thought about this? And I'm like, it is rare that I say no, but I literally have not. And that is such a good idea. And we just started like going back and forth. We had a great conversation and they ended up investing, and that improvement really, really helped the company. And so kind of going in, recognizing that it is going to be difficult, but it's also an opportunity to speak to largely incredibly intelligent people who have seen many companies similar to yours, and kind of get that feedback. That's been really fulfilling.
Well, we're out of time, so please join me in thanking our panelists for being here today. Thanks, guys.
Thank you.